Did you know that the breakfast cereal that you eat in the morning was originally created to stop people from, well, let's just say, spending too much quality time alone? The origins of Kellogg's cornflake are tied to some rather unexpected beliefs about health and self-control. Welcome back to WellPod X, Tony here. Today is 18th of March 2025. Here on this channel, we talk about everything related to money, investing, crypto, and psychology. If you're keen to stay ahead in the finance game, be sure to subscribe. Now, let's take a quick look at today's market. Bitcoin is currently at $83,000. Ethereum is trading at $1,900. Over in the stock market, Tesla's share has dipped again to $238, following a reduced price target from Mizuho. On the other hand, the company we're talking about today, Kellogg, is trading at 82%, nearing its all-time high. Tomorrow we have the FOMC meeting to anticipate, and potentially millions and billions of dollars will be liquidated in the crypto market again. Let's keep a close eye on it. Now let's get into today's morning deep dive. This is probably one of the strangest stories in business history. I'm sure you've probably eaten cornflakes at some point in your life, but did you know that they supposedly invented to stop people from masturbating? Yes, you've heard it right. The famous Kellogg's cornflake, the golden crispy breakfast cereal, have a bizarre backstory that involves a crusade against self-pleasure, a family feud, and ultimately one of the biggest business empires in the food industry. But here's the thing, beneath the weirdest lies a powerful lesson for business, branding, and investing that applies just as much to Bitcoin, stock, and entrepreneurship today. The story starts with Dr. John Harvey Kellogg, a devout Seventh-day Adventist and an absolute fanatic when it comes to clean living. He ran a sanitarium in Michigan where he preached the danger of certain food, alcohol, and most famously, any form of sexual activity, even within marriage. John believed that a bland, plant-based diet would suppress sinful urge, and he spent years experimenting with food that he thought would help people stay, quote, pure. This led to a rather accidental discovery, cornflakes. One day, while trying to develop a healthier bread alternative with his brother, Will Keith Kellogg, they left some cooked wheat sitting out for too long. When they rolled it out, it flaked instead of forming a dough. Rather than toasting it, they baked it, and cornflakes were born. But while John saw this as just another tool in his war against temptation, his younger brother Will saw something far from valuable, a business opportunity. This is where things get interesting, because what happened next is the ultimate case study in vision, risk-taking, and seizing opportunity before the world catches on. Something every great investor or entrepreneur understands. Will recognized that cornflakes weren't just some strange health food experiment. They had mass market potential. People want quick, convenient breakfast, and he knew that with the right marketing, cornflakes could become a household staple. But his brother John, he wasn't interested in making money. He refused to add sugar to the recipe, believing it would corrupt people's soul. You've probably already guessed what's gonna happen next. So Will did any great business leader would do. He took the idea and ran with it. He left the sanitarium, started the Kellogg Company in 1906, and turned cornflake into a national household item. But here's the most important part. He didn't just sell cereal, he built a brand. He added sugar to make the product more appealing, put a friendly green roster on the box, and invested heavily in advertising, something his brother refused to do. And that's why today, Kellogg's is a multi-billion-dollar company. And John's vision of the world without self-pleasure? Well, let's just say that didn't work out too well. Now what does this bizarre history lesson have to do with investing, businesses, or even crypto? First, recognizing opportunity before the world catches on is one of the most valuable skills that investor can have. Will saw something that others, including his own brother, didn't. He saw a changing world, a shift in consumer behavior, and he capitalized on it. That's the same way early Bitcoin adopters, Tesla investors, or Amazon believers saw the future before it becomes obvious. Then there's the power of branding and competitive moats. Will didn't just create a product, he built an empire around it. He understood that people don't just buy products, they buy brands, trust, and familiarities. That's why companies like Apple, Coca-Cola, Microsoft hold their value. They build a strong moat that make them incredibly hard to replace. And what about adaptation and innovation? The original cornflake were an accident, but instead of discarding the mistake, Will turned it into a revolution. That's exactly what smart investors look for. Company or asset that can pivot, adapt, and thrive in changing conditions. Think about Amazon starting as a bookstore and becoming the backbone of global e-commerce. Investing isn't just about picking winners, it's about identifying adaptability. And finally, conviction matters. Will had a strong conviction in his business, Even when his own brother doubted him, he took risks, went against traditional thinking, and bet on his vision. The same applies to investing. When you believe in an asset, whether it's a stock or Bitcoin, you need to stay committed, even when the market is full of skeptics. The biggest reward comes to those who can tune out the noise and play the long game. Sometimes, the biggest brands start with a small idea that no one takes seriously. And people who see the trend early and stick to their convictions, they're the ones who win. Will Keith Kellogg's turned a breakfast accident into a global empire by understanding the market better than anyone else. And the question is, when you see the next big opportunity, do you think you'll act on it like Will did? Now, let's take a look at today's top news. The first news. Elon Musk has recently claimed to have discovered at least 14 magic money computers within various federal departments, including treasuries, defense, health and human services. These computers allegedly have the ability to issue payment and create money out of thin air. If this is in fact true, this revelation could have profound implications for fiscal policy and monetary oversight. The second news, Standard Chartered just adjusted its 2025 Ethereum price forecast downward by 60%, setting a new target of $4,000. As we mentioned multiple times, these institutions often miss the mark by quite a bit. This revision serves a kind of a reminder of the volatility in the crypto market. But other than that, for a long-term investor, this could actually bring the opportunity for us to dollar cost averaging into Ethereum. The third news, the Magnificent Seven, including Apple, Microsoft, Amazon, Alphabet, Nvidia, Tesla, and Meta, have had a tough ride in 2025, and most of them seeing a decline to various degrees. While macroeconomic factors like interest rate concerns and market corrections have weighed on tech stock, each company have faced its own set of challenges. We've talked about Tesla's struggle a lot, and Nvidia, despite strong long-term semiconductors trends, has seen some pullback as investors take profit after its massive rally last year. Apple and Microsoft faced headwinds from slowing consumer spending and regulatory scrutiny, while Amazon and Alphabet also have to navigate through retail slowdown. The one exception is Meta, the company we talked about yesterday, has been outperforming the rest of the group thanks to its strong ads revenue and AI-driven growth in engagement. And as usual, we'll be watching closely to these tech giants and see what they do for the rest of this quarter. That's a wrap for today's episode. Please subscribe for daily updates in weekdays. Stay invested, and I'll see you tomorrow.